Nigeria's outgoing agriculture minister, Akinwumi Adesina, has been elected as the 8th president of the African Development Bank at the bank's headquarters in Abidjan in Cote d'Ivoire. Now, we'll be exploring in the next half hour the bank's achievements and, of course, the key issues that Mr. Adesina has to deal with over the next course of time as the bank's president. This is Global Business Africa. Thank you for joining us. Here's what's coming up. We'll be in Uganda. It's stepping up the campaign to end the trade in illegal game trophies. And ostrich farming is making a comeback to South Africa. Black farmers are firmly in the lead. Our lead story tonight comes out of Abidjan, where Nigeria's outgoing agriculture minister, Akinwumi Adesina, as we mentioned a little earlier, has been elected as the 8th president of the African Development Bank. To get there, he faced off against 8 other candidates in the race to replace Donald Kaberuka, who steps down in August after a decade in charge. The bank is one of the continent's biggest lending institutions. Most of the time, it finances infrastructure projects. Now, the bank's board of governors voted in favor of the Nigerian minister after the race was narrowed down to just 3 candidates about 2 hours ago. And that included the finance minister from Cape Verde, who also was the only woman out of that 8, Christina Duarte, and the Chadian national, Badumbra Kodje. Other candidates were dropped in the initial rounds of voting at a closed-door session. The bank's members include 54 African states and 26 non-African nations. That includes the US, China, Japan, and the UK. Now then, in one of his last speeches as the president of the African Development Bank ahead of this vote, Donald Kaberuka presented his vision on what the bank and by extension his successor, Mr. Adesina, needs to focus on over the next decade. Now, the first obviously really should not be a surprise to you. Infrastructure. Under Dr. Kaberuka, the bank has committed over $28 billion to infrastructure. Most of that has gone into energy and transport, roughly $22 billion worth. His successor, however, faces the challenge of making the bank more innovative in de-risking projects. Case in point, Lake Turkana wind power. The World Bank said, no, we're not touching this. AFDB came in, and now that project is firmly on the ground. He or she also needs to focus a lot more on energy sector deregulation, including, of course, energy subsidy reform. Now, linked to this at the same time is economic integration. The bank has sunk $4 billion into this sector in the last 10 years to deal with projects from just the movement of goods from point A to point B to the movement of capital and the setting up of power pools right across Africa. Breaking down non-tariff barriers, which currently plague inter-African trade, is a cause that Mr. Adesina obviously needs to champion very, very strongly. Now, in our opinion, one of the most important issues of the 5 that Dr. Kaberuka's successor needs to focus on is actually enabling the private sector to grow and thrive. Over the last decade, the AFDB has scaled up its focus on private sector investments, and that has handled deals from about worth $200 million a year up to about $2 billion in 2014. Now, that current growth rate, the AFDB's work in the private sector could surpass its public sector side operations within the next 5 years, and that certainly should be something very, very interesting to see. Now then, let's head over live to Abidjan. Celestine Carine has been keeping tabs on developments over there. The African Development Bank has just elected its successor to Donald Kaberuka, and she joins us now live on the line. It's Akinwumi Adesina. Celeste, tell us what we should expect from him.
Well, Adesina, like you said, agriculture minister in Nigeria, he is actually a man who has been credited with transforming Nigeria's agriculture sector in an era where everybody had focused on oil and reviving it over the last 4 years. So people are hoping that what he has done in Nigeria, he could bring with him into the AFDB. Now, like you said, he is putting as well a lot of focus on private sector involvement. He says he needs the private sector to increase its involvement in development in Africa. He's talking about strategic investment in infrastructure. This is one area that the bank has gotten both criticized and applauded for its work in infrastructural projects. He's talking about increased regional integration as well, Rama, among the countries in the AFDB. Now, of course, there's a lot of people here talking about more of the challenges that he is facing. One of them really being that the bank's vision is being challenged right now, and many people are looking at a focus where they would move away from, you know, attracting private financing to large-scale infrastructure projects, and maybe just involving poorer countries more in and helping them access international debt markets. Now, remember, the bank has already drawn its vision up to 2022, and so the question here is, how does he now prioritize his ideas and his vision for the bank to align itself with that which the bank has already set out until 2022. Of course, he takes over in September, Rama, and then we will see what he will do for AFDB.
Indeed, we'll leave it there for the time being. Thank you as always for your content from Abidjan. That's Celestine Carinet, live, of course, from the African Development Bank's annual meetings over in Côte d'Ivoire. Now, on to Zimbabwe. Its stock exchange is one of the oldest on the continent, and it has not in any way, shape or form been spared from the country's harsh economic environment. From a peak of just about 78 active counters, it's now down to 63, and trade is pretty subdued. Farai Mokutuya has the details.
In the last 7 days, Econet Wireless and OK Zimbabwe released their financials. The telecoms giant, the ZSE's biggest counter by market capitalization, recorded a 40% drop in profit, while the country's largest retail chain's profits shrunk by 22%. Sad reading, but indicative of the times.
This year, the Zimbabwe Stock Exchange has found a new home, occupying this complex in one of Harare's upmarket suburbs. That move intended to coincide with automation of the exchange, a development that will make it more accessible to international investors, increase transparency, and speed up turnaround times for settlements. However, the stock exchange continues to be weighed down by some familiar problems.
Subdued trading, tumbling earnings, and delistings. No less than 10 companies have bowed out of the exchange in the last 5 years. 4 are currently suspended, and only a handful of those that remain are active. The BAUS's CEO is a worried man.
The whole purpose for a stock exchange is to have a regulated platform. So if we do not meet the requirements of the regulation, then you cannot be listed. And of major importance is issues about disclosure of financial statements. You know, how have you traded, what were your accounts, things like that. So if we can't get that information, we go through a process of encouraging that company to do so. If it continues, then obviously we cannot maintain it on the post.
But the exchange, which last saw an IPO 5 years ago, is trying to attract more listings. The Zimbabwe Emerging Enterprise Market, an alternative market for SMEs, is earmarked to kick off this year.
It's also a realization and an understanding that we need to build our listings first and foremost, and that the markets and the economy has changed. It has changed from being large companies to small to medium enterprises. So we see that if we reduce the rigor of some of our listing requirements to cater for the small to medium enterprises, which are on a growth path, our listings will increase.
A revolving fund to help meet the costs of listing is being set up to aid takeoff. The easier requirements may also entice some delisted counters back, which would be good news for the exchange that is currently facing tough times. Farai Mokutuya, CCTV, Harare, Zimbabwe.
Now then, a lack of energy from fuel in terms of petrol or diesel all the way to electricity is a significant bottleneck to growth for many an African economy. Now, the fact that governments like those in Nigeria and Egypt subsidize the cost of fuel only makes markets more inefficient and resistant to change. Earlier today, I spoke to Alex Rugamba, the African Development Bank's director in charge of climate change and energy, about the continent's energy issues. I started our conversation by asking why, despite its enormous natural gas reserves, Nigeria still can't provide a consistent supply of electricity.
I think the Nigeria situation will need a little more patience. The issue is that the country has implemented a number of important reforms in the sector, and we'll soon see the results of those reforms. And among them is the privatization process, creation of new companies for generation and for distribution. In the African Development Bank, we have given a partial risk guarantee to help mitigate some of the risks of the power purchase agreements. The Nigeria bulk electricity trader will be the one buying power from independent power producers, and some of these will be using the gas to convert to power. So I think it's a question of time before we start seeing some positive results in this regard. I think we're going to see a combination really of the two. For the foreseeable future, there will still be significant on-grid, and then off-grid will pick up. I think for increasing access, particularly to the rural areas, off-grid obviously is the way to go. But you must also understand that Africa needs to industrialize, Africa needs to transform its natural resources, and that does require still on-grid solutions. So I think let's look at eventually a 50-50 if you like, but it's a combination of the two. You may be surprised actually, but actually progress is happening. Right now we're at the preparatory phase of Inga 3, which will, when complete, would generate 4,800 megawatts. This is the third phase of an 8-phase project. And really what's happening now is that the African Development Bank and the World Bank are funding studies that are necessary before the work start, and the procurement process also will soon be underway to select a developer for Inga 3, which is a very important phase of the Grand Inga. So yes, the traction is not very visible obviously to the public eye, but I want to assure you that things are moving on this important regional project.
Right, and let's make a quick run through the markets here for you. Day of red ink right across the board. We're more interested, however, in the East African market. The NSE 20 ending the day just above 4,800. Cumulatively so far this year, Kenya's main index is down about 5%. Now, that's due to a couple of reasons, but one of the main glaring ones is this still unresolved standoff between the Kenya Revenue Authority on one hand and stockbrokers on the other over the implementation of capital gains tax. That's a really big problem, still not resolved, as we are about 2 or so weeks away from the budget for the 2015-2016 fiscal year. We're starting our conversations around the World Economic Forum for Africa early. We'll be looking at the tech innovations that need to be leveraged in Africa. And Uganda stepping up the campaign to end the trade in illegal game trophies. We'll have the latest on that shortly. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai.
There is a need for a predictable environment in which investors have to put their money.
Welcome back to the program. You're still watching Global Business Africa. In about a week's time, the World Economic Forum on Africa kicks off in Cape Town, South Africa. With it, as usual, comes a wide range of conversations on various issues, from governance to the opportunities represented by an explosion of access to the net and cheaper, more efficient technology. Now, despite marketing itself as the home of the Silicon Savannah, tech acquisitions and deals in the East African nation of Kenya have been pretty scarce. And that leads one to ask, where exactly are the viable, scalable tech enterprises over here?
It's no longer just a networking thing or competitions, as you would call it. These people are out to now make a living out there, and that's one way we're trying to help. And I think by focusing on our challenges and the opportunities therein, we are able to work with these developers particularly in an environment that is supported by strong intellectual property laws, such as the ones we see certainly in Kenya and but a lot of other countries, we create a situation where these people are now able to monetize their ideas and create the incentives for them to participate more and more. So it's not just about networking or competitions or anything like that. It's about being sustainable from an economic point of view, creating an organization around your ideas, hiring more people, etc., etc., etc. So we expect a lot more innovative companies to emerge from this part of the world. And as I always say, in Africa we are blessed with challenges, and those challenges create opportunities, and the type of challenges that we deal with are such that when we solve them, we've basically solved the problems of the world.
Based on the work that you do with developers and innovators and entrepreneurs across Africa, what are the most pressing needs that they face in building these sustainable enterprises? Is it a question of skills? Is it a question of getting access to capital? Is it a question of access to markets? Or is it simply the operating environment in which they're in that is perhaps not conducive to letting them scale up their businesses?
It's actually all that. Let me start with one. So I think all of us recognize the fact that Africa is 1 billion people. And when we say that, we are basically setting up a conversation in the context of China and other places in terms of being a market and so forth. I also say that not only are we 1 billion people, we are also younger than the rest of the other markets, which means that we have a market today by being 1 billion people, but interestingly, we have a market in the future. So from an investor point of view, that's an interesting market. However, you and I both know that from a jurisdiction point of view, policy point of view, financial markets point of view, and et cetera, et cetera, et cetera, we have 1 billion people, but they're broken up into 50 countries. So unlike, say, China, where effectively you could make decisions and they have an impact across or effect across 1 billion people, you can't really say that in Africa. So one of the big challenges we have to do, we have to take on, is to knock down these walls represented by our boundaries. And for this reason, entities like the Africa Union or the regional economic communities such as SADC, COMESA, etc., become very important. Africa Union from creating Africa-wide policies or designing Africa-wide policies to be adopted by all the RECs from an implementation execution point of view. We need to do that very quickly so that the 1 billion people we're talking about are 1 billion people as opposed to 1 billion people in 50 different areas, which makes it very difficult to do. So things like just trading between two countries or one part of Africa versus the other is a challenge if you don't have the same e-commerce policies, if you don't have the same privacy, data protection type of laws, et cetera, et cetera, et cetera. So those are the things we have to overcome.
Part of my conversation earlier with the director in charge of Microsoft for Africa, Louis Tieno. Now, speaking of Southern Africa, there's a management shake-up at the global miner Anglo-American Southern African unit. The CEO there, Mark Kutifani, will be taking over from Michael Spicer as the chairman of the board, effective in June 1st this year. Kumba Iron Ore Chief Executive Norman Bazima was appointed as deputy chairman. Andile Sangu, previously head of sustainability at Impala Platinum, has been appointed as executive head. Now, the changes are geared towards helping the group build a more competitive business altogether. South Africa is home to Anglo's assets through the diamond producer De Beers, Anglo-American Platinum, or AMPLAT as it's more commonly known, Anglo-American Coal and Kumba Iron Ore. The firms collectively employ about 70,000 people in the country. Over in East Africa, Uganda is reinforcing its ability to curb the rise in illegal wildlife poaching. The country's tax body recently announced that it is setting up a specialized unit to tighten its grip and better police its border points. Officials from the Revenue Authority have recently intercepted tons upon tons of elephant tusks from suspected traffickers, raising the need to crack down on this illegal trade. Leon Sanyange has more.
Poached mainly for its horn, the rhino was nearly driven to extinction around half a century ago. But through conservation efforts, the rare animal has been reintroduced to Uganda's wildlife. Now authorities say they cannot afford to lose the rhino or more of the country's endangered species. Uganda's tax body has joined a multi-agency effort to conserve and fight illegal wildlife trade.
There's been an increase in the activities under this division of enforcement that are really more related to wildlife crime, and it's upon that as an institution it was decided that enforcement division should actually set up a specialized unit to strictly handle wildlife crime because of the figures coming through.
The Uganda Revenue Authority has intercepted tons of elephant tusks from suspected traffickers in recent times. Now Uganda's lead conservation agency says a strong tax body presence, especially at border posts, will go a long way to curb illegal wildlife trade.
And once in a while we do targeted operations at some border posts, Mpondwe, Busia, Maraba, but we don't have presence. Yet URA has presence. So if we can have a unit within URA that we can train as Uganda Wildlife Authority to be able to help us and work with us, that is a welcome thing.
Uganda has been used as a transit route for wildlife traffic. Conservationists are now pushing for stricter laws.
The reason Uganda is used as a conduit for illegal wildlife trade is because we have weak penalties and small fines. So we are also trying to address that and make sure that we make it stringent. We make it very difficult for people to use Uganda as a conduit. If you are caught and prosecuted, you should get the maximum sentence that will be a deterrent.
Seizures of ivory and pangolin scales by Ugandan authorities have been valued at more than $1 million. The many porous borders in Uganda have made it even harder for law enforcement officers to effectively apprehend poachers and wildlife smugglers. Authorities say continued collaborative efforts will strengthen the fight against poaching, which remains a major threat to wildlife. Leon Senyange, CCTV, Central Uganda.
If there's one conclusion we can draw from the commodity prices we're just about to put up, crude oil bulls are firmly in the back seat and the bears are finally back in line. 61.54 is the relevant number that we're looking at on Brent crude, down about 8 cents in trading today. Continuing, of course, a string of losses that we've seen dominating trading this week. Ostrich Farming making a comeback in South Africa, and black farmers are taking the lead. Their story is coming up next.
Africa is not one country.
And Africa is not one story.
But as Africans, we do share one belief.
One more offensive in a
that whatever the challenge, we will overcome.
CCTV Africa brings you unrivaled coverage.
From the fight against Ebola to the fight for greater freedom.
From the figures seeking your vote to the figures shaping your economy.
This is Guy Henderson reporting from the jungles of East.
And all the reasons to celebrate the diversity of life on this great continent.
Welcome back to the program. Let's talk about black economic empowerment in South Africa. It's a government policy that aims to address past imbalances and economic injustice. So far, it's had fairly limited success, with only a minuscule percentage of South Africa's population benefiting overall. But as Angela Coppola reports today, there's a sector that appears to be getting it right.
The ostrich industry was considered almost dead on its feet when avian flu struck several years ago. The sector took the knock on the chin and used the opportunity to rebuild in 2010.
We were approached by government for a BEE project that they were struggling a bit, ostrich production specifically. And what we said to them is we will assist them, but it must be commercially viable. And this is where it jumped off. And we had 20 black farmers, mostly women, in the rural part of Pedi. It's in the Grahamstown area. and they farmed with ostriches 150 birds per farmer.
5 years later, and there are now 60 farmers delivering around 6,000 birds to the KKI-affiliated abattoirs.
And that makes them one of the largest contributors to our raw material base in Clan Crew International, roughly about 10%. These people don't have any security, so they can't go to a bank and ask for money to buy chicks or whatever. They're out in the bundus, there's no infrastructure for them, and that's where we come in. So we said we'll give them a production loan, an interest-free loan. We'll provide the chicks so that no one can take advantage of them. We provide a mentorship and a support base for them.
And these entrepreneurs are making it work.
So they're working for themselves, and those people are putting their children through school, through university. You know, they're building houses for themselves.
In the South African context, black economic empowerment is a key imperative if it means that the country is going to reach its economic growth projections that are expected for this year. And it seems like those in the ostrich industry have got a business model that actually works. I'm Angelo Coppola for CCTV in Oturan.
Now, the Kenyan shilling is our focus of attention with regard to currencies. We mentioned a little earlier in yesterday's program, actually, that the Monetary Policy Committee has called an emergency meeting. That's happening on the 9th of June. Today, the currency actually went as low as 99 to the dollar. The only reason you're seeing 97.70 on your screens right now is because the central bank came in and sold a bunch of dollars into the market through brokers, which it has banned and then reinstated on the 26th of May. Before we go, here's a look at what we're working on for tomorrow's program. Nigeria obviously will dominate our agenda. Muhammadu Buhari will be officially sworn in. He takes office at a time when Africa's biggest economy is facing serious challenges, including a significant deficit running to about $60 billion as a result of a slump in global oil prices. The Naira is also at some of its lowest levels against the dollar. Energy supply is not enough to drive the economy's wheels. Corruption is a significant problem. Insecurity is frustrating investment as well. So, does he have what it takes to actually get Nigeria out of that problem? Also, we will be talking to the outgoing president of the African Development Bank, Donald Kaberuka, on his 10 years at the helm of this institution. All that and more will be coming your way. Another day of conversations and ideas right here in Global Business. As always, we value your feedback. Send it to globalbusinessafrica@cctv.com. As always, Facebook and Twitter are your port of call when we're not on the airwaves. Thank you so much for watching. I'm Ramanyang from Nairobi. See you in 23 hours.